everybody, what's up? Friday, February 7th, yeah. Alright, market is down as of this recording right now. Dow off about 300, S&P down about 19, fractional moves. I gotta tell you, this jobs number today was a pretty good number, 225,000. Last night I sent out my forecast to my subscribers. I said it was going to be 203,000. The consensus was 160,000, so I was pretty close. Remember last month I hit it right on the head, 145K. So I said 203,000, it was 225,000. Now let me say something, that's a good number. And you know, I've been talking a lot about the fiscal situation and how I think there's been a slowdown in the fiscal support. It's still positive, it's still adding to the economy, but you know, I've been talking about how taxation, the tax flows, right? It's two ways, these flows. I mean, taxes are taking income out of the economy, spending is putting income into the economy. So there's a flow going one way, there's a flow going the other way. The growth rate of taxes is exceeding the growth rate of the spending. Now, spending is still up overall when you subtract out the taxes, but that differential is narrowing. It's not like last year or the year before when there was a wide differential. In other words, way more spending, both in nominal terms and in velocity in the growth rate as opposed to taxation. Now, the velocity of taxes, income getting sucked out of the economy is faster than the velocity of the spending, the income that's getting injected in. It's still overall positive, but that differential is narrowing. But let me get back to the point of this jobs number. That was a good number. That was a strong number. And quite honestly, in the recent data that we've been seeing, and I don't look at the data 30 days ago, one quarter back. You know, look at weekly unemployment claims. That's pretty real time. That's once a week. I mean, the one this week on Thursday, yesterday, as a matter of fact, was down to 202,000. That's a very low level of weekly claims. Now that thing shot up in mid-January, around the third week in January, and it looked like a turnaround in that people were, you know, signing up for unemployment, but that has come way down. Way down. Unemployment benefits being paid. I track this every single day from the daily treasury statement. That looks like it's going up, but it's inconclusive at this point. All right, it's still down year over year. The differential there is narrowing slightly. What else? If you look at the petroleum demand, if you look at gasoline demand, if you look at distillate demand, which both of those things had been very weak in December and then in January, and now they're picking up again. If you look at bank credit, right? I talk about that all the time. Sharp slowdowns in the growth rates of loans and leases. But in the last report, a nice rebound, not in the growth rate, but in the nominal levels, in the amount of loans outstanding, a nice rebound in almost all loan segments. I mean, commercial and industrial, consumer loans, real estate loans, all of them picked up. So I would say the situation is inconclusive. Oh, here's another thing. What about sentiment? Very important too. If you're a trader, you want to look at sentiment. That's more of a short-term thing, right? The weekly AAII, the American Association of Individual Investors, their weekly sentiment survey just came out Wednesday. A low level of bullishness, below the historical average, a high level of bearishness, above the historical average. So it's not like people are wildly bullish. Not like a few weeks ago when that thing was at levels that we hadn't seen in like 2 years. The level of bullishness is down again, and bears are way up. About the only thing I could point to from a sentiment analytical perspective would be the put-call ratio, and that's really only on the 20-day average of the put-call ratio. That's around the lowest level in 2 years. The 10-day average, which was down that popped back up, and it's almost near the historical average, slightly below, I would say. So that's the situation. I don't see another thing here. Let's talk a little bit about the coronavirus, because that's important. And I'll be honest, maybe I'm missing something there, because I don't follow that. I don't have nobody really has information on that. Maybe the people on the ground there in China, the government, we don't have it. It's all right now conjecture. I mean, it looks like it's growing. Sometimes it looks like it's under control. We had that report that came out earlier this week that they have some vaccines. The market shot up. You know, I focus on the economics, but there are those who are saying it's impacting industrial activity, certainly in China. It's maybe spilling over now. We see maybe some impact in South Korea. I don't know. And it could be very true that this thing ends up really having a very negative impact on economic activity, and it spreads throughout the world in terms of that negative economic impact. I don't know, but one thing that I can look at as to maybe sort of quantify it or have a barometer of what's going on, look at U.S. oil exports. China is a big consumer of U.S. petroleum. And I don't see in oil export data a big hit. There was a little bit of a pullback in the latest EIA report this week. And by the way, if you want, I do a full analysis on that. That's why you got to go to my website, pitbulleconomics.com, and sign up for a 30-day free trial of MMT Trader. I mean, I do a full analysis every week on that EIA report with charts and everything. But I didn't see any big pull. Maybe it's going to come. And maybe tonight, look, tonight we get the latest on the banking data, comes out at 4:30. I want to take a look at that. But so far, I'll say this. I really don't see anything in the numbers that indicate a big hit to the economy. If anything, the jobs report today, wages were up, the highest level since November. The biggest increase since November. So I just don't see it. It's inconclusive. Now, I know a lot of you out there, you don't like that answer. You want to know now. You got to know now. There must be some number out there, or the market, the price of the market must be telling us something. It's not. It takes time for conditions to develop. And sometimes we just have to wait. It takes time for conditions to develop. I know you want everything just like that. I know you want to look at the price of the market and ascribe some meaning to that. No. Most of the time, market movements are just noise. They're just random. Over time, the fundamentals will dictate. Supply and demand will dictate. Policy will dictate. But what happens on a day-to-day basis, a week-to-week basis, even a month-to-month basis, 99% of that is noise. And one final thing I'll say, and this also speaks to the mental game. This is a stressful activity. Trading, investing. Your money is at risk. I understand that. Your body will have automatically a physiological response to a bad situation when you're losing money. It's the nature of the beast that you are going to be faced with stress. Any psychologist would tell you if you are faced with a bad situation, get away from it. And that makes a lot of sense. You're not going to if you put your hand in a fire or something, you're feeling pain from some action or activity or something inflicting pain, your natural reaction is to pull away from it, is to get away. But that doesn't work here. Because when you feel pain, and pain comes in the form of losing money, and that could be in open positions or whatever, open position, losing money. Pulling away means you cut your losses, right? The famous cut your losses short, let your profits run. But that assumes that the next situation is going to be fine. You don't know that. It's inherent in this activity that we do that you are going to feel stress all the time. So a psychologist would also tell you, and that's that same psychologist who told you pull away from a painful situation if it's happening, he would also tell you in a situation where you have no other choice, because that's the nature of the situation, change your attitude about it. Deal with it. And, you know, I've been saying, look, build up mental toughness, build up resilience, embrace it, find a way to get through it, manage your position, don't overextend yourself, don't be needy, don't want everything like this. If you can do that, the world is yours when it comes to this activity. All right, everybody, have a great weekend. Sign up for my MMT Trader. Remember, I'm the only one who has an applied approach to MMT. The link is right here in the description. Have a great weekend. Bye-bye.